Hey everyone, welcome back. So today is Wednesday. Markets were actually up today along with Bitcoin, Ethereum. For the most part, the miners were up also, so we'll look at all of that. We'll also take a look at some FUD. So we got Binance, COCZ, stoking some fears yesterday. We'll get into that. We also have New York State signing into law, possibly having a moratorium on Bitcoin mining, but we'll get into it, all of that. And then we'll also take a look at which miners will survive this crypto winter that we're in. We'll use the latest data that we do have. We are still missing the data on a couple of the miners for Q3 numbers, so I'll point those out. But we'll also talk about those a little bit and give you my thoughts on those. Okay, so that is it. As always, not financial advice, for entertainment only. Do your own research. I'm invested in 5 coins and companies for full disclosure. And if you enjoy this type of content, please hit the like button, subscribe. It helps me out tremendously. And let's get into the markets. Okay. So we are on Greenwich, which we should be on S&P. S&P was up 0.59 today to 44,027. Dow Jones was up 0.28% to 34,194. And the NASDAQ was up 0.97 to 11,838. Bitcoin was up quite nicely today. It's been having a pretty good rally here the last 2 days. Yesterday was up 2.79%. Today it was up another 1.9. Oh yeah, today hasn't changed over yet. We still got an hour to go. So today it's up 1.92%. We got about an hour left to go. And RSI is going up a little bit here. It's still not looking great on the daily chart as far as a bullish pattern here. Same thing on the 4-hour charts. RSI is going up while the price is still actually lower at different points where the RSI was lower. So it's not looking good there. 1 hour. Same thing, we peaked a little bit here, and last time we were at this price, we were over here. RSI was higher, or lower, sorry, so not looking too good. Ethereum was up today, or still up today, approximately 3.53%. Yesterday was up 2.92%, so nice little 2-day rally that we're having here right before Thanksgiving. And let's take a look at the miners here. ANY was up 1.34% to 34 cents. Argo was down 8.46% to a little bit less than 8 cents. Bit Digital was up 1.82% to 91 cents. Bitfarms was up 5.08% to 62 cents. CleanSpark up 2.33% to $2.20. Cores was up 9.91% to 14.75 cents. DigiHost was down 5.18% to 60 cents. DMG was up 3.07% to $1.15, sorry. And Greenwich was up 9.78% to 60 cents. Hive was up 0.94% to $2.14. Hut 8 was up today 5.63% to $1.22, and Iris Energy was up 9.8% to $1.68. Luxfolio was flat on the day. Marathon was up 0.93% to $6.48. Mawson was up 14.29% to 40 cents, and then Riot was up 10.78% to $4.42, and Soluna 3.07% to 79 cents, and Stronghold was up 3.8% to 76 cents. So overall, pretty good day in the markets. Part of the reason was the sentiment is thinking that we're not going to get as big of an increase for interest rates come December. So market's kind of liking that, and that's possibly why we're going up. Let's see if we can refresh this really quick. And right now the network hash rate is at 263, up a little bit from the 261 that we were at. So we are still trading a little bit sideways here with the network hash rate, which in a sense is good because it kind of helps out the miners a little bit instead of continuing to go up. So we'll take it if it just kind of holds around this line here, around 265, 260 million. That would be great there. Okay. Now let's take a look at the stories that we do have here. First story is New York governor signs law. So New York governor signs first of its kind law cracking down on Bitcoin mining. Here's everything that's in it. I'm not going to go over into details. We'll go over the 2 main points here. So New York Governor Kathy Hochul signed a law on Tuesday banning certain Bitcoin mining operations that run on carbon-based power sources. So if you think about that, think about coal. I don't know, I read through the article. I didn't see anything about natural gas. Natural gas could be considered a carbon-based. Well, it's carbon-based, but it's an offset of it. It's cleaner. But I didn't see anything on that, so I think that's okay. There are some miners that are in New York, and this may affect them going forward, and especially if they're using carbon-based power like coal. So for the next 2 years, unless a proof-of-work mining company uses 100% renewable energy, it will not be allowed to expand or renew their permits. So the companies that already do have their permits are going to be in trouble if they're using carbon-based power, and new entrants will not be allowed to come online. Okay, so there's 2 schools of thoughts in this one. One is obviously that's bad for the industry, bad for New York's economy. And then the other part of this is also others that see it as There's other places in the United States, Georgia, South Carolina, Texas, and other places like that, where it's still, crypto friendly. And to me, this isn't really that big of a deal. If you're using, burning coal to fire up your miners, I wouldn't be against them getting banned for doing that. You should be using cleaner energy to do that, especially with Bitcoin. So I'm okay with it. And as long as you're using 100% renewable energy, you have no problems in New York. But there is also that fear that further legislation could come down the road where it just bans it completely. So it does make it a little bit more of an less attractive state to do business in, possibly, especially for Bitcoin. Okay, so there's that FUD. And then we got this. So this is Binance's CEO sows doubt in crypto rival Coinbase and digital asset manager GRAYSCALE, then backtracks. So CZ quickly deleted a tweet that called the company's disclosures into question. Let's get into this. This was yesterday. So on Tuesday, Binance CEO CZ stepped into one of the biggest worries of the moment, doubts among some observers that GRAYSCALE, operator of the biggest Bitcoin trust, actually holds all the Bitcoin says it does. And GRAYSCALE, which like CoinDesk, is owned by Digital Currency Group. And I got to do some more research on these guys. These guys seem to be having their little hands in everybody's little cookie jar. Has said that those concerns are unwarranted, and GRAYSCALE has been backed by its partner Coinbase, the exchange that holds the Bitcoin. But CZ tweeted numbers that, if they were true, would undermine GRAYSCALE and Coinbase's position, just stating news reports, not making any claims, he wrote, and then now deleted tweet. Right, so spreading a little FUD there. And then here's what CEO Armstrong said of Coinbase Coinbase CEO Brian Armstrong appeared to respond soon after on Twitter. If you see FUD out there, remember our financials are public. We're a public company, referring to crypto parlance for fear, uncertainty, and doubt. Binance is a privately held company that doesn't disclose financial information. So maybe we should be asking CZ to provide proof that he has coverage for all of this stuff. I don't like it when people call out others when they themselves don't really provide the information or don't really have to, being a private company. There's probably a little bit more fear of Binance, something happening to them, because we just don't have the numbers from them. Minutes later, CZ deleted the original tweet saying, Brian Armstrong just told me the numbers are wrong. He added, let's work together to improve transparency in the industry. Yeah, he should have probably talked to Brian Armstrong before he tweeted about this. This could have been one of those plays where he's trying to dominate the market with this company. Zhao also played a central role this month in the collapse of crypto exchange giant FTX after a November 2nd CoinDesk story spurred doubts about the financial stability of Sam Bankman-Fried's crypto empire. CZ announced that he was selling the FTX token that the CoinDesk story talked about. That triggered a panic that led to FTX into bankruptcy. So you can look at it both ways, as CZ being a villain or possibly a good person, right? Based on just two of his tweets. So that is just that. And let's get into the miners, see which miners will actually survive this crypto winter that we're in. So as you guys are aware, I track all the miners, I track all the data on them, all their financials, everything else, and then we put it all into this nice little spreadsheet that we have here. And we can run some numbers on it, see what's going on, see if they're improving or not improving. And here's what we got. So we got a couple companies that still have to report their Q3 numbers. Those are Argo, Bit Digital, CleanSpark, and CleanSpark I think has their end of year numbers that they're coming out with. So that takes a little bit longer because they have to be audited. And then you got DMG and Iris Energy. I'm still waiting on their results as well. So we got 1, 2, 3, 4, 5 companies out of the 6 or so that we're tracking right now. But we can take a look at what we have right now. And the things that we really want to pay attention to is current ratio and debt to equity ratios, see where they stack up at. And one thing that we know is, we'll start off with Argo. Argo, we know, was trying to get investment earlier on in the last 2 to 3 months. They were trying to get a private investor to put in, what was it, like $20 some odd million of his own money into the company to shore up their balance sheet a little bit, because of the continued increases in electrical prices have been very detrimental to their operations. Sorry, I had to take a sip of water. So we know that, so there is some concern there with Argo. Based on their Q2 numbers, they weren't looking too bad. They had a current ratio of 2.1 and a debt to equity ratio of 0.83. With the current ratio, you want it to be higher is better, and then debt to equity ratio lower is better. So they were okay there. They were a little bit in trouble here as far as current assets minus total liabilities. So I look at that also. So I take their total current assets, which was 162 million, and at that time they had total liabilities of 164 million. That give us a negative number of basically 2 million right there. So really need to see what's going on there with them in the third quarter to have a better picture of what's going on there. But they might, I think they're going to be possibly in a little bit worse situation this time around if energy prices have gone up and they have burned through some cash they had. But we'll see. Okay, so that's Argo. Argo, I think, is going to be okay, but we need clarification from their Q3 numbers. BitDigital. BitDigital reported, let's see here, they reported also for Q2. They had, at that time, 78 million in assets. Total current liabilities was only 4 million. So current ratio was 19, which was no worries there from them. Total liabilities was only 7 million as well. So they had very, very low debt to equity ratio as well. So I don't think there's going to be any issues with them unless they burned through all their cash and took on a bunch of debt, which we haven't heard or anything like that from them lately. So I think they should be okay, but we'll take a look at it when they report Q3. Bitfarms had, this is for their latest numbers for Q3, so they had 102 million total current assets. Total current liabilities was 82 million. Current ratio 1.253, so they're good there. They can at least pay off all their current liabilities from their current assets. And then their total liabilities was up to 113 million, and that gave them a debt to equity ratio of 0.433, which is okay. It's right in the middle of their range, which isn't too bad. But when we looked at their current assets minus total liabilities, they were in the hole 11 million, which isn't too bad. The good thing is that they actually improved on that. They were higher in Q2. So they did get this lowered, so that's good, and that's what I'm kind of looking at there. So I think they're going to be okay. CleanSpark, with their Q2 numbers we have here, we can see that they had total current assets of 29 million, total liabilities of 19 million, so they had a current ratio of 1.473, which was okay. And then their debt to equity was also pretty low of 0.091. They did have a negative 4.7 million if you take the total current assets minus total liabilities. That's what we came up with here based on total liabilities of being 34 million and total assets of 29 million. Now, they have gone on a little bit of a buying spree, but they have been also selling their Bitcoins that they have mined. They bought a facility from, who did they buy that from? Was that from Mawson? I think it was from Mawson that they bought it from. If my memory serves me correct. Down in Sandersville, Georgia. So they bought that facility. They paid some of it with cash, some of it with shares in the company, and also some seller debt financing as well. So that might be reflected in the Q3 numbers. We'll take a look at those, see how those stack up, but I think they're going to be okay based on the numbers that they have here. Core Scientific is, we're looking at the latest numbers here. So Core is obviously a concern for us. They have 213 million in total current assets, total current liabilities 1.2 billion. So that is a current ratio of 0.166, which is not good. That's very bad. Total liabilities of 1.33 billion, and debt to equity is 18.22. So way, way up there. And their total current assets minus total liabilities is a negative $1.1 billion. That actually increased by $200 million this quarter around. So that's not good. Okay, so they are definitely on the hit list of possible candidates that might not make it through this crypto winter. They have done some things to delay their some of their loans until possibly January or February. That should help them out a little bit, but with Bitcoin being down to where it's at, around 16,000, that's not good. That's we'll see if they can work this out, but it's going to be a hard battle for them to work it out with the lenders and everything else. They need probably at least another 6 months to another year before Bitcoin starts possibly going up to the point where they can pay for everything. That's kind of my thoughts on that one. So Core is definitely on the hit list here. DigiHost reported, let's see here, Q3 numbers. They had 11.6 million of total current assets, total current liabilities of 2.6, current ratio of 4.3, so they're doing good there. Total liabilities was only 6.3 million, so they got plenty of cash on hand. Debt to equity ratio of 0.117, so that's really good. The only thing is that they did increase their number here from the prior quarter, which isn't too bad. And if we look at DigiHost here, 4.32 on the current, DigiHost down here from Q2, they were 3.85. So that they actually improved on that, so that's actually pretty good there. No worries there. Okay, next is DMG. DMG also reported their Q2, so we don't have their Q3 yet. They looked at that time, total current assets of 13.7 million, total current liabilities of 4.5, current ratio of 3.009, which is fine, which is good, and total liabilities of 4.5 million. Their debt to equity ratio is 0.059. I doubt that they're going to have any issues going forward, but we'll take a look at it. So currently, I don't think they're going to be in any trouble. And then we got Greenwich here. Greenwich reported Q3 numbers. 54 million in total current assets, 98 million in total current liabilities. That is 0.554, below 1. That's not good. That's a concern there. Total liabilities of 217 million as well. That is a debt to equity ratio of 2.43. That's also not good. So that's a concern there. They also increased their assets minus total liabilities by 16 million in Q3 to 163 million, which isn't good as well. So there's a concern there as well for them, that they might have a hard time getting through this bear cycle that we're in. Next is Hive. Hive reported their Q3 numbers. They have 88 million in total current assets, 23 total current liabilities. And their current ratio is 3.749. Total liabilities of 49 million, almost 50 million, and debt to equity ratio of 0.218. So they're in good shape there. No worries there. HUT, similar story with them. They're in pretty good shape right now for Q3 as well. 265 million in current assets, which also has their HODL position in there. Total current liabilities of 27 million. Current ratio is 9.56, so they're doing great there. Total liabilities is 67 million, and total debt to equity ratio is 0.136, so they're good there as well. No worries about HUT. Iris Energy, we're still off of their Q2 numbers. They had 237 million in total current assets. Total liabilities was 126 Australian million, and their current ratio was 1.88, so that's good there. Total liabilities was 217, so their debt to equity ratio was 0.335. They're okay there as well. No real issues there, but we'll see how this gets impacted from Q2 to Q3 when that comes up. I don't think there's going to be any issues, but we'll see. Okay, so that was Iris. Marathon. Marathon reported their Q3 as well. They have 240 million in total current assets. Total liabilities is 45 million. That is a current ratio of 5.2, so that's fine there. The big problem comes in here with total liabilities of 850 million, and that is a debt to equity ratio of 1.361. So that's concerning over there. They did also increase their current assets minus total liabilities number here by 122 million to 610 million. So that's not a good sign. They're burning through a lot of cash here. And they are another one that is of concern for me right now. So we got Greenwich, Marathon, and Core Scientific right now as going concern for me. These are the ones to watch out for. They also have like 80% of their HODL position restricted, and they're basically backing their loans with those BTCs. So that's not good. If Bitcoin goes, Bitcoin goes even lower to around 13,500, they're going to get called on those. They're going to have to put up more collateral, or they're going to have to give away those Bitcoins, unfortunately. So that's always a risk there. That's always not good. Mawson reported these all reported their Q3s. Mawson was at 37 million in total assets, total liabilities. Current liabilities was 62 million. Their current ratio is 0.62, so that's not good for them. Total liabilities of 87 million. So that gives us a debt to equity ratio of 0.942, which isn't too bad, but they still have a lot of debt if you take all current assets minus total liabilities. They're in the hole there. They did improve by 28 million on that, so that's a good sign there. So it looks like they're slowly getting out of the hole potentially, but we'll have to keep an eye on them, see how they continue going forward. The concern here is the current ratio. They have a lot of current debt that they got to pay off, and I think the sale of the facility to CleanSpark will help with that number there, which will be reflected in Q4 possibly. Okay, excuse me. Next is Riot. Riot has currently 476 million current assets. Total current liabilities 107 million. Current ratio is 4.45. Total liabilities 154 million. Debt to equity ratio of 0.119. They are in great shape. No worries there from Riot. Soluna is at 5.9 million right now in total assets, current assets. Current liabilities is 27 million, so that's not good. Current ratio is 0.216. And their total liabilities is 40 million. and their debt to equity ratio is 0.619, so it isn't too bad. But their current assets minus total liabilities did increase by 10 million to 34,500,000. So that's not good. That's a little concerning there. We'll have to keep an eye on them as well. And then finally, we got Sphere 3D here. Sphere has 29 million in current assets, 4 million in current liabilities. That's a current ratio of 1.58, so that's not too bad there. Total liabilities of 5.18 million, so that's not too bad there. And debt to equity ratio is 0.025. Now their total liabilities, and let me see here. Yeah, they actually improved quite nicely here. They improved, well, they went down. So they were at, I believe, 44 million here with having current assets minus total liabilities of 44 million. Now they're 24 million. So they did come down a little bit here. They're burning through cash while they've been working out the deal with their supplier of ASICs, which was, I think, Bitfufu, if I'm not mistaken. But they got that resolved in last month or this month. Can't remember now. Time's flying by. So I know they got it resolved. They're supposed to get some miners in. That should help them going forward. So I think they're going to be okay. So based on all of this information that we have here, Soluna is a little bit of concern. Based on the numbers here, there's a slight concern. Mawson is a slight concern as well. Marathon, GreenEdge, and definitely Core Scientific are of concern as well. So those are the ones that would be mindful of and be wary, in those companies. If Bitcoin goes south on us to like 13,500, that's going to be trouble for Marathon, I think. And CleanSparks, they just have to work everything else out, if they can work it out with the creditors and everything else. But they have a huge hill to climb to get better. What we really need is Bitcoin to go back up in price to save some of these miners. Other than that, we can't rule out bankruptcy, especially for Core. And GreenEdge, same thing. It's going to be tough, but we'll see. Okay, so that is all those. And then as far as what these companies can do to improve, I mean, well, Core Scientific hired attorneys, and they hired also restructuring specialists, whatever they're called. But some of the things they can do is cut costs. I mean, they're still spending a lot on employees, management, airfare. I think Core's had 1 million that they reimbursed to management for airfare. Now, where are you traveling for 1 million in 3 months? And hotels and everything else. So there's things that they got to cut in order to survive. Unfortunately, a lot of it's going to be painful. I think employees' salaries have to go down. Automation should be, it's a tough part. Automation, I don't know if they're doing automation or if they're not doing automation. I'm saying if they're not doing it, they need to do it. And then, obviously, expenses is the biggest thing that they got to cut. So they have a hard time ahead of them right now. And let me clear my throat right now. They have a hard time to get there. It's not going to be easy. It's you need to work with the creditors. You need to get things figured out, and it's going to take time. In the meantime, we need Bitcoin to go up in price, especially for Core Scientific. I think Core would need to be around 35,000 for Bitcoin for them to dig their way out of this quite quickly. And same thing for Marathon. Marathon has to do the same thing. They have problems with Compute North. So that's a going concern as well with them. Okay. So that is it. I hope you guys enjoyed it. Tomorrow is Thanksgiving in the United States. So if you guys are in the United States, happy Thanksgiving. Hope you guys have a great time with your families. I am going to be watching probably football, eating a lot. And if I get bored, I may record something. We'll see. But don't count on it. If we do get a video done tomorrow, that'll be a treat. Okay. Hope you guys enjoyed it. Hit the like button, subscribe. Spreadsheet is always available to my Patreon members. Thank you to everyone there for their continued support. And thank you so much for watching. Love you all. Have a great Thanksgiving. I'll see you guys in the next one. Bye.